Hi there, welcome back to Dukascopy TV. I'm Ben Jones. On the line with me today to give us an update on the Greek economy is Danae Kyriakopoulou from the Centre for Economics and Business Research. Now Danae, what I'd like to discuss today is whether Greece is actually improving. Obviously the data is seemingly more positive. However, for those living in Greece, do you think the situation is actually improving, especially with worsening living standards and unprecedented unemployment?
I think Greece is currently at a very dangerous junction precisely because things seem as if they're improving. It is clear that politicians and the electorate are keen to ride the wave of positivity that we've seen recently, but a premature sense of mission accomplished would risk negating part of the progress that we've seen already, as well as a sense of complacency in terms of the reforms that still need to be implemented. And we've all seen the data, quarter-on-quarter growth rate of 0.7% in Q3 this year. This was the highest pace in the whole of the Eurozone. But this is largely also a seasonal effect in Greece because the country tends to enjoy greater growth over the summer months because of the importance of tourism to its economy. And also the launch of government bonds earlier this year was generally seen as a success, but yields today are significantly up since the summer. And as you rightly say, the improvement we've seen in market mood has not yet translated into people's pockets and living standards. And over a quarter of the population is unemployed. And when looking specifically at the youth, this shoots up to just shy of 50%. And I think this is one of the biggest risks in expecting a sustainable recovery, given that many of these young and often highly educated people are emigrating to other European countries, including the UK, due to the lack of job opportunities in Greece. And those that do stay and remain unemployed risk losing their skills the longer they are out of the labour force. And this is something that will make the return to a job especially challenging when the economy does finally return to recovery. And living standards are under pressure despite a fall in the cost of living, and the middle class has also been squeezed significantly through the government's policies of raising taxes to raise receipts and comply with the Troika agreement. So overall, I think I would still be far from saying that we have a strong recovery in Greece.
So what can be done about this, and can you also discuss the impact the snap election will have on the economic outlook?
Yes, echoing what I said before, I think that in order to improve the situation, it is important for Greece itself to remain committed to its reforms, especially now that it is so close to achieving recovery. But it's also important for the creditors of the Troika to adjust their demands to what is politically realistic for an economy which, as I mentioned, is suffering from very high unemployment and a big squeeze on living standards. The IMF in particular has been especially strict in its bailout reviews, and it's been pushing Athens to implement very deep spending cuts, overhaul the pension and tax system at a pace that is generally unrealistic. And they should be the ones to fear most. I mean, economic history shows that sovereign defaults are much more likely once a primary budget surplus is achieved. And this is a surplus of government revenue over expenditure, excluding interest payments on any outstanding debt. And if this balance is positive, then it means that the government has little incentive to repay its debt and has more negotiating power over the Troika, as it essentially can stand on its own feet. This is something that has happened to countries that have been in similar positions, such as Argentina in 2001 or Pakistan in 1999. Who defaulted within a few years from achieving such a surplus. And in terms of the election, I think there will certainly be a rise in economic and political uncertainty around this month. And we are likely to see some damages to business and consumer confidence. We've already seen the stock market tumble this morning by 8%, and 10-year bond yields also rise from yesterday. And even though the election itself is for a largely ceremonial role, I think it's hard to tell what the impact will be, as it depends on the outcome, and in particular on whether the government is able to get support to elect its candidate. And if this doesn't happen, then the next step would be to call a general election, which would lead to further uncertainty and potentially a change in government, as Syriza is currently leading in the polls.
And finally, the inflation rate has been released today. Can you give us your initial reaction to this?
Yes, I mean, it's not a surprise that Greece remains in deflation and that the pace is broadly in line with the average we've seen in the past half year or so. This tendency of prices to fall on a year-on-year basis is a combination of both external and domestic factors. On the one hand, we have slowing growth in emerging markets that keeps commodity prices low, and the developments in the oil market that are also keeping energy and fuel costs low. And this is a good type of deflation, and one that should be welcome to Greek households struggling to afford the essentials. But on the other hand, we also have domestic downward pressure on prices, and this is coming from weak demand and a weak economy. And this is a bad signal. It suggests that the recovery is still far from picking up. The European Central Bank is doing a lot to try and bring inflation across the Eurozone up, but we're yet to see the results of the measures it launched recently. So that's something we're still looking quite closely.
Danae, thank you once again for joining me today. And thank you for watching. That's all from me for now, but make sure you stay tuned to Dukascopy TV.